We hear so many different things. On the left, they say it's a tax break for the rich. On the right, they say we need this. Middle class will benefit. What's your takeaway?
Well, there's no doubt that this is neither simple nor fair. As Mr. Frank has said, the new tax break for pass-through income is going to be the biggest single cottage industry for tax avoidance strategies we've seen in a couple of decades. And there's also clearly no question that the benefits of this tax break are going to go primarily to the top 1%, that middle-income families will be, at best, an afterthought.
Is that fair to say, though, that the 1% will benefit because the 1% always benefit, simply because their numbers are so big that even a small tweak produces outsized results?
If you choose to design a tax plan that's focused on cutting taxes for corporations, for whom the biggest owners are the top 1%, if you choose to focus your tax cut on pass-through businesses, again, with something like 2/3 of the income from those going to the top 1%, then inevitably you will get a tax cut for the rich. As it happens, however, middle-income families have a fair amount of income. They pay an awful lot of taxes. And if the goal really was to design a tax bill geared toward them, it could have been done and would have been done in a very different way.
There are many other non-wealthy or people who exist not in the upper echelons of wealth who will benefit, though, from this, what you call a loophole, correct, Matt? I mean, we're focusing on the rich because they probably have the most income that will be taxed, no?
Well, sure. The middle-income families will benefit from one particular provision in the short run, the doubling of the standard deduction. They're given and taken away, though, because the expanded standard deduction is in some cases offset by the loss of the personal exemption we all get. Per family member, a $4,000 reduction in our taxable income, that's going away. And of course, 10 years from now, all the individual tax cuts will go away. That's an important thing to understand about this bill. The corporate tax cuts are permanent, but every single one of the major individual tax cuts that will go to families under this bill will be gone at the end of 2025.
What about the benefits from 401ks and some of the changes to the 529 plan, Matt?
The only thing that is actually permanent, the only thing that is lasting on the individual side isn't a tax cut at all. It's this, there's a provision to use a different measure of CPI, inflation indexing, which will gradually reduce a whole bunch of tax breaks. Everything else is gone.
Do you think that the fact that it's not permanent will mean that investors will not change their thinking? They won't act in the way that the bill is designed to make them act because the change is not long enough for them to say, let's switch strategies? Or is 7 years long enough to do that?
Well, I would sure hope that the temporary nature of the plan reduces the incentives businesses have to react to them, because almost all the incentives businesses could react to as a result of this plan are negative. It's tax planning. It's not new investment. It's shifting their business around in a way that's designed to take advantage of the loopholes. But yeah, the main effect of having a temporary tax cut with phase-ins and phase-outs and special carve-out rules is to introduce uncertainty into the tax system. It's not the sort of thing anyone can plan around for the long run.
Yeah, but what if 401ks, if they go up, don't people then have more money to spend? Won't that counter some of the effects that you're talking about in the tax plan, Matt?
Yes, that's narrowly true. But if you want to talk about the other shoe that's going to drop, if you want to talk about the long-term implications, what we're looking at right here, best case scenario, is a $1.5 trillion tax cut over the next decade. The repercussions of that for the economy and for middle and low-income families are going to be felt only when we see the secondary effect on spending. We know already from what congressional leaders have said that the next step to dig us out of this hole they're trying to dig us into is cutting discretionary spending, cutting all the areas of spending that benefit us, that benefit middle-income families, from road infrastructure to healthcare to education. And that will hurt us all in the long run, and our children, far more than any short-term tax cuts we might get.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.